how to catch a falling knife, because this is going to eliminate 50% of your losses. In fact, it's already cut my maximum drawdown by 50%. That's what we are going to be talking about today, because I see so many people trying to catch a falling knife straight up and it's just blowing past their entry, hits their stop loss, only for it to reverse and hit their take profit. So that's what we're going to be diving down. We call it the Confirmation 2.0. I know it's got a sweet name to it. So I appreciate if you guys like the video, subscribe, and if you guys have any questions, reach out to me on social media at Moneyball Austin, Facebook, Twitter, Instagram, and let's get straight into the setup. Okay, now that we got the intro out of the way, we can get to the good stuff, because I probably sat here for about 45 minutes watching the Masters, trying to record that 10-second intro. You got to understand, I'm trying to compete with these 16, 18-year-old Forex trading gurus who are telling you that you can turn your $100 account into $1,000, into $10,000 in less than a month by following my signals. These are guys that I'm competing with, and these are the people. I'm not going there. So hey, let's get into it. I've noticed a lot of people say they don't have the balls to pull the trigger when the market is falling, which I understand, because I'm going to get into an example, because the best way to talk about these markets is to go through examples and trade reviews and trade setups so that you guys can learn. Because I understand it can be very intimidating trying to catch a falling knife. The market's falling very rapidly, and then I'm telling you that you should have a pending order or you should push buy when the market's falling. You feel a lot better about yourself when the market's pushing up and then you push buy. So let me give you guys a quick recap on this. So this was a trade on gold. Let me blow this up so that you guys can see. So gold, if you don't know, gold has been rallying over 20% over the last 2 weeks. Okay, so I want to be looking for buying opportunities. What I noticed was prices were coming back into this area of 5-minute demand zone. Beautiful 5-minute demand zone, all right? A lot of people would be looking at this, trading the breakout, people trading the breakout retest, okay? But keep in mind, if you decide to trade the breakout retest, as in you're entering your trade right here on this demand, you're buying this market as the market is falling, okay? We're trying to avoid that, because a lot of our unnecessary losses come from when we are buying and the market's falling rapidly. That's where a lot of my drawdowns were occurring, okay? So what we are waiting for is waiting for evidence of buyers stepping in. So we have this beautiful demand zone. It's taken out supply, it's broken momentum, it's a breakout retest. It's a fantastic zone, but I don't want to buy this straight up. So instead, I wait for a candlestick pattern. Once again, I am waiting for a candlestick pattern. In this case, an engulfing candlestick. So you can see right here, I'm scrolled in all the way so that you guys can see this. Prices came in, okay, I'm getting filled here on this trade. Once prices close this engulfing pattern, that's when I'm going to place my stop loss below it. Some people might have their stop below the whole zone. That's fine, okay, that's one way to trade it. But in this case, I'm buying once I've been shown evidence of buyers stepping in. Once again, this is just an engulfing candlestick. This could be regular confirmation of structure on a smaller time frame. This could be an engulfing pattern stick. This could be a wick reversal setup. I don't know. There's like a million different chart patterns, whatever, okay? Find one that makes sense to you, all right? Find a couple that makes sense to you. There's like 2 or 3 that I like, and there's like 100 other ones that I can't stand or I don't understand that make 0 sense to me, all right? You don't want to be trading them all. Find 1 or 2 that make sense to you, okay? And so that would be a Confirmation 2.0 setup, all right? Let's go into one more example. So this is a trade setup on gold. We had prices going into a higher time frame demand zone. Okay, I don't like buying this straight up, okay? But I understand I'm in an area that I want to look for buying opportunities. This could be another technical analysis bouncing off of support. This could be lining other indicators or other technical analysis to say why I want to be looking for buying opportunities. That is fine. But now that I'm located inside an area of higher time frame demand or other reasons of why I want to look for buying opportunities, I want to then wait for sellers to, in this case, buyers to come in. So in this case, I went down to a lower time frame, and what I noticed here was we had this squeeze pattern. We had prices falling, and then you can see it's getting tighter and tighter. So we got the squeeze down, and then it's tighter and tighter. Usually, what comes from this is a very strong imbalance to the upside or to the downside. Now, what I was waiting for in this case was waiting for prices to break up to the upside, and then I would get filled into this trade. Taking this setup alone straight up would be valid. Okay, I'm buying inside a demand zone. I like the zone. I love buying gold right now. But instead of buying prices as it's falling with a pending order, let me go down to a smaller time frame and wait for that confirmation. Wait for that evidence. That could be, like this. Lower lows, lower highs, momentum lines being broken, price action looks like that. And so typically if I'm going to be trading this, let me show you one more example of what happened today. Perfect. This is a trade setup that is a regular setup that I am buying when prices are falling. This is something we want to avoid because this was a losing trade. So we had on our higher time frame a beautiful support slash demand zone down here. Support slash demand, prices coming back down into it. I want to be looking for buying opportunities. I saw here on the US oil, this 1 minute time frame, this beautiful over here, let me scroll down, this beautiful buy setup, okay? Now, I entered long here when prices returned back into my zone, okay? I bought the falling knife and it ended up being a stop loss. I got stopped out, right? Because I am buying the market as it is falling. One way to do this is I could have waited for some type of confirmation, some type of candlestick reversal over here, okay, and then entered long. It still could have been a loss, but I'm trying to show you what I'm trying to avoid and what I'm trying to do, okay? So let's look at one more because we learned from examples. So this trade setup was talked about in our Discord. Now what this S&P 500 trade was, so I went down to a 15-minute trade, a 15-minute time frame. In fact, I set it right here. The US 30 and maybe a couple other indices have created this 1 to 5 minute drop base rally setup that was created from the PPI numbers, okay? So this was a setup saying, okay, this zone was created during the PPI numbers. But like I said, I understand it can be intimidating to buy a setup when prices are falling. You wanna wait for confirmation. So that's what I did. So alone, this setup alone was a viable trade setup to buy. We were inside higher time frame demand, we had the confirmation, and you would have the entry once prices come back into it. So what this would look like is we have our higher time frame demand zone, prices come down, we have prices turning inside out, and we are trying to enter on the pullback buying a falling knife. All right, but like I said before, I understand it can be a little bit intimidating. So what I'm trying to do here now is to say, well, let me go down to a smaller time frame once prices arrive back into this 15-minute zone and wait for confirmation. So that's why we've been calling it confirmation of confirmation, right? This is an area that we want to buy. So I want to wait for, say, a 1 minute time frame to show me evidence of buyers stepping in. And so that's what I did here. In fact, we could use this. I was going to go to the picture of the trade review. And I've made multiple videos on this before about talking about how prices turn inside out. We're trying to avoid trying to buy straight up the zone as price is falling, right? So we have prices coming back into our zone, and this could be used for, support and resistance or other trading strategies, right? But in this case, we have these lower lows, lower highs. And what I saw at this point is we started making higher highs and higher lows. So once prices started making higher highs and higher lows, that's when I'm entering my new trading opportunity on a smaller time frame, right? And so we had this price pulling back into a 4-hour demand zone, pulled back into our entry time frame, our 15-minute or 5-minute demand zone, but I wasn't comfortable with trading that zone straight up, so I waited for evidence on a smaller time frame. Let me show you another example of what I mean by this. The German, because this would be a setup that is valid. It's live. I don't trade the German, but hey, this is something I would be looking at. So some traders might be selling this straight up. Okay, that's fine. Okay, It's a very nice supply zone. A lot of sellers stepped into the market. We're in a downtrend. Some people might see this as resistance. That's totally cool, okay? A lot of people will sell this straight up once prices return. I don't want to do that. Let me go down to a smaller time frame and wait for evidence of sellers coming in. So maybe I go down to a 5-minute, and what I see here, do you notice how prices were rallying? Okay, we're in an uptrend, prices rallying and rallying, rallying. I need to wait for structure to be removed. All right, I want to see prices going like this, higher highs, higher lows, and then waiting for that breakdown to happen. We have the market currently in a sideways market. So how some traders might approach this is what they're going to do. The trader selling straight up, trying to sell this market that's rallying, is already into the trade. Now, some traders will wait for this sell-off to occur and they'll wait for this breakout to happen. That's one way to trade it, all right? I think that's fine. I think that's valid. I personally don't like doing that. So what I'm going to wait for is I'm going to wait for the market to break down and then pull a retest back up into that area, and then I'm going to look to get short, okay? I'm not going to sell the area straight up. In fact, let's go down to a 1-minute so that you guys can see this, okay? Because we're still going sideways. We're barcoding right now. This is what people call it, barcoding, when we're going sideways. Okay, if I'm going to sell this thing, I need to see these buyers taken out. This demand, these structure, this support, I need to see this being removed before I start looking for selling opportunities, all right? The early trader is currently in short. So what I'm waiting for is the sellers to come in, then the retest, and then I will potentially look for areas to get short in here. Some people will sell straight up. Some people will then wait for candlestick confirmation to show me evidence of sellers coming into the downside. I think that's totally fine. There are multiple ways of trading this, but what's important is that you're trying to buy or sell when the market is moving in your direction. And these are just little tools, right? There's so many different ways to trade, right? But it's important to have multiple different ways of trading in your tool bag. It's something I recommend at the start, becoming a one-trick pony, but later on you're going to become a better trader. And this is not something I recommend until you've already been making money consistently with at least one setup, is start branching off to different setups, right? Look at the one time frame setup, look at the confirmation 2.0, look at the multiple time frame setup, look at how other people are trading. How can you add to your trade? All right, it's like a tradesman, if you know, an electrician, a plumber. It's like their tool belt. All right, they got so many different tools in their belt. They could use one tool for 90% of the work, but there's a reason why they have 20 different tools in their belt, because for the job that they're trying to work, there's a certain tool in their tool belt that make the most sense for that job. So hey, I appreciate if you guys like the video, subscribe, and like I said before, feel free to reach out to me on social media at MoneyballAustin. This will help you eliminate your drawdowns and help you start making cash consistently. If you would like to learn my exact trading strategy in 10 minutes or less, then check out the video on the screen now.